Hi traders, you're welcome back to the Forex Geek channel. And today, in this particular video, we are going to be looking at a topic that can significantly enhance your swing trading strategies. Okay, precisely, we are going to be considering the best settings for the relative strength index in terms of swing trading. Basically, we are looking at the best RSI settings for swing trading in this video. Okay, so if you are looking to boost your trading success and make more informed decisions, then you are in the right place. So let us get started. First, let's briefly talk about what the relative strength index, or the RSI, is. Okay, the RSI is a momentum oscillator that measures the speed and change of price movements. It helps identify overbought or oversold conditions in a market, which can signify potential reversals. Okay, let me just change these settings to the default. So we usually have the overbought level above 70 and the oversold level below 30. Okay, now the RSI helps you identify overbought level and oversold levels in the market, okay, which can signal potential reversals. Understanding how to utilize the RSI effectively is crucial for any swing trader. Now you might be wondering, why do the settings matter? Now the default settings, like we see here, the default settings for the RSI is 14 period, but this can be adjusted based on your trading strategy. By customizing your RSI settings, you can optimize your indicator for the specific assets you are trading and the time frame you are focusing on. This means you can get more accurate signals that align with your trading style. Okay, now let's explore some recommended settings for different swing trading approaches. The first is the standard setting, which is the 14 period. Okay, now this is great for most traders as it balances responsiveness and reliability. It captures significant price movements while filtering out noise. Okay, now the second is the short-term setting. You can see how the 14 period looks like. Okay, now if we reduce the period to 7 for short-term setting, we can see that it reacted faster to price changes. If you are looking for faster signals, you might want to try a 7-period RSI. This setting is more sensitive to price changes and can help identify quick reversals. But be cautious of false signals. One of the side effects or limitations of reduced period is that it is more prone to false signals, to giving false signals, right? So in as much as it helps you identify signals early, it can also give you false signals faster. Okay, now the long-term setting is 21. Okay, 21. Let us go to a higher time frame. All right, 21. For a smoother, more reliable indicator, a 21 period RSI can be beneficial. It reduces the number of trades and focuses on longer trends, which is ideal if you prefer a more conservative approach. So even as a swing trader, you might be a kind of swing trader that prefers holding trades for just a few days, right? On the other hand, you might be a swing trader that prefers holding trades for weeks. So it depends on your approach to swing trading. It depends on your tolerance for holding trades for long. That's what's going to determine the period you are going to use. So for a swing trader who is using the 14 period, you might be targeting just maybe holding your trades for perhaps a week or thereabouts, and maybe you can be focusing on the maybe 30 minutes, 1 hour time frame for your swing trading, because you can actually hold trades for a couple of days if you are trading on the 1 hour time frame. Yeah, if you are capturing some longer trends, you can still hold your trades for a couple of days. Then if you are the type that prefers longer holdings, perhaps in weeks, then you can decide to trade on the 4 hour or even the daily time frame and use the 21 period setting. Okay, you can use the 21 period setting for that. Then if you are the type of swing trader that perhaps just want to capture a few days price movements, then maybe you can decide to use the 7 periods and you can still focus on the 1 hour time frame, or you can even enter the 4-hour time frame. For the fact that you are now using the 7 period, it means that the RSI is going to give you faster signals. When you're using the 7 period, RSI is going to give you faster signals, so you might end up capturing trades for a couple of days. Okay, so it all depends on your swing trading approach. You can try experimenting with different values to know which one works best for you. Okay, so and one thing you should know is ensure that you observe proper risk management. It is very, very important. Okay, it's very, very important. Now, when you are trading, make sure that you set your stop loss at appropriate levels. For example, when you enter a sell trade, after you get a sell signal, make sure you set your stop loss at appropriate levels. Okay, perhaps above the nearest resistance or nearest swing high. Then when you enter a buy trade, when you set your stop loss, you can set it below the previous swing low, below support levels. Okay, it's very important that you set your stop losses at appropriate levels so that you don't end up getting stopped out of the market, and then eventually the price of the asset begins to go in your direction. That's usually painful. Okay, so in order to avoid that, just set your stop loss at the appropriate levels. All right. Okay, so I hope you found this breakdown of the RSI settings for swing trading helpful. Remember, the key to successful trading is not just about having the right tools, but also knowing how to use them effectively. Now, if you enjoyed this video, please give it a thumbs up and subscribe to our channel for more valuable trading insights. Don't forget to hit that notification bell so you never miss an update. Okay, thanks for watching and happy trading.